a lot of positive takeaways coming in from the JLR Investor Day. In fact, the Reimagine strategy is all about right-sizing business as well as reorganizing business. They plan to simplify business, make it more agile, and focus would be more in terms of profitability over the volumes. They plan to launch 6 Land Rover models in pure EVs in the next 5 years, with the first launch being in FY24 itself. The pure BEV contribution to volumes is likely to increase to over 6% over the next few years versus nearly just 3% right in FY20. They also plan to increase the EBIT margin to more than 10%, driven by the refocus program. Controlled capex at £2.5 billion per annum is seen for the next 3 years, with an increase to nearly around £3 billion by FY26. They're also looking for a partner for the Jaguar BEV. In fact, they expect to be near free cash flow break-even in FY21 and FY22. They expect to reach the near cash break-even. This is after considering some amount of reorganization cost itself. They expect to reach the net debt zero levels by FY24 and also increase the free cash flows by FY23. JLR is also planning to focus more in terms of growing the luxury segments. They aspire to increase the share by 2x in segments which are better, which do give better profits, and also market share gains across profitable markets is going to be the focus, with focus in markets which are profitable, for instance China, UK, as well as the European Union. They plan to consolidate architecture platforms from 6 platforms to 3, of which 2 would be more in terms of the flexi architecture platform. In terms of their Q4 outlook, they do state that there is fair amount of uncertainty due to the semiconductor supply issue. Having said that, they still expect 10 to 15% quarter-on-quarter growth in volumes in fourth quarter, and they also expect 4% in terms of the EBIT margin in fourth quarter. They do also state that they've lost 15% production in Jan 21 just on account of Brexit. They have also shared a detailed roadmap to electrification, which is the pure BEV contribution to volumes to rise to 60% over the next few years versus 3% in FY20. They plan to launch the 6 Land Rover models in pure BEV in next 5 years. A first Land Rover BEV launch is seen in FY24, and pure BEV Jaguar would be from 2025. Full phase out of the pure ICE is seen by FY26, and net zero emission levels at the business level is seen to be achieved by 2039. Motilal Oswal, in fact, has gone ahead and upgraded the consolidated EPS by 15% and 9% for FY22-23 respectively. For Tata Motors, this is after factoring in the restructuring cost of £1.5 billion in 4Q and £0.5 billion on cash flow in FY22. This is also after factoring in subsequent benefit of lower depreciation and amortization costs. In fact, they maintain a buy on Tata Motors with a target of 400 rupees per share. This is at the March 23 SOTP value. So yes, watch out for Tata Motors stock.